I'm Wendy Gillette with Small Cap Nation. I'm joined today by Ryan Feit, who is the CEO and co-founder of SeedInvest. So thanks so much for being here.
Thanks for having me.
Tell me first, what is SeedInvest?
SeedInvest is a leading equity crowdfunding platform that allows individuals to access investments and startup investment opportunities for the very first time.
What kind of companies are there involved?
It's primarily consumer-facing technology companies that are really early on and are raising either their first or second round of capital. And this allows investors to invest directly alongside venture capitalists for the very first time.
How many investors do you have?
Well, we have about 22,000 high net worth accredited investors using SeedInvest and about 140,000 total investors. So we built out quite a big network, which is really helpful for the companies on our platform because they're able to tap into a really large network on day one.
And how many companies do you have?
Well, we have about 400 companies that apply every month. Since we started a couple of years ago, we've had over 7,500 companies that have applied on the platform. But one of the important things about SeedInvest is that we're highly vetted. So although we've had over 7,500 companies apply, we've only accepted 1% of companies to present to our investor base. So we do our own vetting and due diligence before investors see any investment opportunities.
And what do you look at as your 1%? What makes the 1%?
Well, in terms of vetting the companies, some of the important things are whether it's an actual company and not just an idea. So we look for businesses that have a couple people who are full-time that already have a prototype or product that is already out there, hopefully in the market, and not just an idea on a napkin. So that's important. And then after that, we're looking at, does the company have traction? Do they have proof that there are customers out there that are willing to pay for their product or service? And making sure that the terms and valuation are appropriate based on the stage of the company that they're at.
What's the percentage of companies that come to you and just really aren't ready yet? Maybe they have good ideas, but they're just not there.
Yeah, it's a high percentage of the companies. Well over 50% of the companies that apply on the platform, we'll basically let them know either that they're not a fit for SeedInvest or that they still have work left to do to kind of get themselves from more of the idea stage to more of the business stage where they're ready to actually start accepting investments from individual investors.
So do you sometimes give them some tips and then they come back to the table?
Absolutely. I mean, and at the end of the day, our mission is to really help entrepreneurs and to provide this online platform and mechanism to make it easier for the founders to raise capital and spend less time raising capital. So we are very consultative in letting entrepreneurs know what they can do to improve and either be ready to raise capital or improve their chance of raising capital.
And how much money has been invested thus far?
We've had over $50 million invested through the platform. And in terms of capital raised per company, we've had companies that have raised $500,000 and we've had companies that have raised $8 million. So pretty big variance in what companies have been able to raise.
And what kind of sectors?
It is pretty broad. It's primarily consumer-facing technologies, so you can think about virtual reality, which we've done a fair amount in, Internet of Things, consumer hardware, consumer software. We've done a lot of financial technology or fintech investments, so a pretty broad range of areas. And at the end of the day, we're trying to help investors to not only invest in startup companies, but be diversified. So that means investing in a basket of different startups to minimize, to reduce the overall risk and to also diversify based on the industries that companies are investing in as well.
The Jobs Act was recently enacted, and what does that mean for your company?
Yeah, so SeedInvest was very involved in the original Jobs Act that was signed in 2012 and have been very involved in the lawmaking process since then. And effectively, the Jobs Act is a big deal for entrepreneurs because before the Jobs Act, you had a very limited audience of VCs and certain high net worth investors that you were able to tap to raise capital for your company. And fundraising just hadn't changed for really 100 years. And now, thanks to the Jobs Act, if you're an entrepreneur, you have the ability to raise capital online and be able to tap into hundreds of millions of people who have never been able to invest a single dollar before in startups. So it's a massive change for entrepreneurs out there and for investors as well.
And how does SeedInvest help those first-time investors who really don't know what they're doing?
Yeah, a couple things. So first of all, like I mentioned before, we do the heavy lifting up front with not just sourcing the investment opportunities, but vetting them as well. So, we do our own independent due diligence on each company. We've accepted 1% of the companies that we put in front of individual investors. Secondly, we built a platform that strives to take a really cumbersome, time-consuming process of investing in companies and streamline it all online to try to make investing in this startup as easy as buying a share of stock. And then lastly, our team all comes from financial services and investing, and we've managed hundreds of billions of dollars for private funds. So we are there to help our investor base as well with any questions they have on investing in startups generally or any opportunity.
What tips would you give to the first-time investor?
Yeah, so that's a great question. The overwhelming answer is that investing in startups is very different than investing in the stock market. And there are three things that any first-time investor should take into account. First, if you're going to invest in startups, make sure you build a diversified portfolio of at least investments in at least 10 companies. Secondly, unlike the stock market where you can change your mind the next day and sell your shares, with startups, you're investing for the long term. So make sure you're willing to hold on to your investments for at least 5 years. And then lastly, although it can be a good idea to allocate some percentage of your overall portfolio into startups, you really shouldn't put more than 5 to 10% of your portfolio into startups. You should save the rest for stocks and bonds.
And your investors, how much do they invest typically?
So big variance. We've had investors who have invested as little as $100 per investor into startups.
I can do that.
And we've had, so it really, our mission is to open it up to everybody. And we've, the lowest minimum has been $100. And we've had investors, family offices that have invested $2 million into a company. So the pretty big variance. On the accredited high net worth side, the average investment historically has been about $50,000 per person per startup. On the non-accredited side, the average has been more like $1,000 to $2,000, so much lower.
And how do you think this is going to change fundraising for companies, startups in the future?
Well, it's a big deal. As an entrepreneur, probably the most frustrating and toughest thing about starting a company is fundraising. It's a process that is very antiquated and it's very time consuming. So what we're doing at SeedInvest is making that process much more efficient for the founders so that at the end of the day, as a founder, you can spend less time fundraising and more time building your business.
Very interesting. Thanks so much for being here.
Thanks for having me, Wendy.
And thanks for joining us today. I'm Wendy Gillette from Small Cap Nation.